Hello, welcome to the European Open briefing for Thursday, March 16th. I'm Ravi Bhajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So the main talk this morning is, of course, the Fed's decision yesterday and its impact on the US dollar. The FOMC decided to raise rates by a quarter of a basis points, as was pretty much expected by the markets, but the dollar fell sharply after the FOMC stuck to its previous forecast of 3 rate increases in 2017. There was some speculation that the Fed would become more aggressive and potentially signal 4 rate increases, but this didn't materialize, and we saw a big sell-off in the US currency. The euro, on the other hand, is up sharply on the Dutch election results, which came in this morning. The far-right party didn't do as well as expected, so that had a very big impact on improving risk sentiment in Europe, but globally as well. But the Bank of Japan also held this policy decision. They kept rates unchanged today, and also the Bank of Japan didn't give any indication as to when they would potentially start to scale back their asset purchases, but there was little impact on the yen. But other notable movers this morning were the Australian dollar and the New Zealand dollar, both of which pared back some of their yesterday's gains on the back of weaker than expected economic data. And we also had some large moves in commodities as well. Oil prices were lifted by a drop in US inventories, whereas gold, of course, benefited from the less hawkish Fed statement yesterday. So gold is up around 1-week highs. Moving on now to that Fed decision yesterday, where they raised rates by a quarter of a basis points to a range of 0.75 to 1%. That's the third increase since 2015 and also the third since the end of the financial crisis. The Fed kept most of its projections for 2017-2018 unchanged, and they stuck to their forecast of 3 rate increases in 2017. So that triggered a sell-off in the dollar. Yellen did sound overall very confident about the US economy, though she was at the same time cautious and didn't really give anything away as to the possibility of 4 rate increases in 2017. And we can see those big drops yesterday in the dollar. The dollar index dropped to a 4-week low, and the USD JPY hit a 2-week low, 112.89. So the attention now is on Trump's budget, which is going to be announced later today. Though, given that this is the first budget since the elections just only back in November, it's going to be a smaller budget, and it's unlikely to include anything about tax cuts for the time being. Much of the focus will be on spending cuts to various government departments, except the military, which is going to get a big increase. So we might see some, although it should be interesting to watch. There might still be some mention about infrastructure spending and on possible future tax reforms. Moving now on to the euro, though, we can see that big jump yesterday, and today it's pretty much holding near those levels. The euro was also boosted by the Dutch election results, where the far-right party leader Geert Wilders, his PVV party, didn't do as well as was expected or was shown by many polls in the run-up to the elections. The incumbent Mark Rutte's VVD party came first, though he fell short of a majority. It could take some time to form a coalition that could add some uncertainty. But overall, there's big relief that across Europe that the Dutch voters didn't turn to the populist parties in very large numbers as had been feared, and that also looks like it might help the French elections coming up next month. The Bank of Japan was another central bank holding its policy meeting just hours away after the Fed. They kept policy unchanged, and the Governor Haruki Kuroda in his press conference didn't really say much that might indicate as to when the bank would scale back its asset purchases. Kuroda says rate cut, even though it's not being considered now, that downside risks to the Japanese economy remain greater than the upside risks, and there was little reaction in the markets in the yen, as the biggest move was, of course, from the Fed's announcement. And that, of course, also had a big impact on the Australian and New Zealand dollars, both of which jumped higher. The Aussie hit a two-week high of 0.7718 against the US currency, and the Kiwi was up over 1% to one-week high of 0.7047. Though both currencies fell back today due to weak data. Australia's unemployment rate disappointed as it jumped to a 13-month high of 5.9% in February. That potentially could mean that a rate cut in Australia, which those expectations had been diminishing in recent months, this might reverse some of those expectations. And in New Zealand, GDP growth was 0.4% in the final 3 months of 2016, which falls short of expectations of 0.7%. And we can see that effect on the Kiwi, which is down around 0.6% this morning against the US dollar. In commodities, oil prices got another boost yesterday from the official US inventories numbers from the EIA, which showed that crude stocks fell for the first time in 9 weeks in the United States. There was also a report by the International Energy Agency which said that demand for oil should exceed supply in the first half of this year, and that also helped oil prices go up a little bit. Although we can see US crude prices, they still didn't manage to break above $50 a barrel. Gold also is up sharply. We can see here in purple in the chart after the Fed's announcement. The yellow metal hit a one-week high of $1,228.75 an ounce as the less hawkish Fed lifted the appeal of the gold prices. Moving on to Asian markets now, we can see that the yuan is sharply firmer this morning against the US currency, mainly again on the back of the Fed FOMC projections, but also we had an increase in short-term rates by the People's Bank of China this morning. That was the third increase in for the third consecutive months, and People's Bank of China is trying to prevent capital outflows as the US rate hikes gather pace, but also on the growing concerns about rising debt levels in China. But overall, we had a very positive risk sentiment in Asian markets. Asian stock markets were boosted by the less hawkish Fed, and European stocks were also up sharply at their open, getting an additional boost from the Dutch election outcome. Looking at today's economic calendar, we can see the Australian data out earlier today and the Bank of Japan decision. We also had the Swiss National Bank policy meeting today. They held rates unchanged at minus 0.75%. There wasn't too much difference in the SNB statement. They stuck to the line that the franc remains overvalued, but there was little reaction in the currency markets with the franc to that decision and the statement. But the Norwegian Central Bank, they also met today and kept rates at 0.5%. The krona fell a little bit after the decision because the central bank in Norway said that their forecasts show a greater chance of a rate cut in the coming period than a rate increase. In terms of date, and also we're going to have the Bank of England policy meeting later today, where they're expected to keep rates unchanged. In terms of data, though, we're going to have the weekly jobless claims in the US and the Philly Fed manufacturing index. And shortly coming out of Europe, we're going to have the final Eurozone inflation numbers. That's it from me. Thank you very much for watching and have a great day.